What's up, everyone? It's Caddy with Money Vesting. It's been such a chaos since markets pretty much have started like at 4 a.m. Eastern pre-market. There's been a lot that's been going on. I mean, I could literally just go on and on here, but volatility getting up to over 30 right now. It's up over 23%. So we're getting a big spike on VIX. We're seeing the yields absolutely plummeted, 7.4%. In fact, that's across the board for all yields. So not just the US 10-year, but all across the board. Even the gilts over in the UK are dropping pretty heavily, and this is exactly what we expected, right? This is like word for word what we were expecting. By the way, let me know in the comments if the live chat is working good, if the audio in the video is good. I just want to make sure that everything is working well. So just give me a thumbs up. Just want to make sure the audio is good. By the way, I've been getting some comments. The audio is too low, so I've kind of increased that a little bit. Just to make sure that it's coming off well. But yeah, it's been wild, right? It's been yields rolling over, volatility spiking. TMF is up over 9%, another expected to open very strongly pre-market. And $10 is going to be that resistance. We'll see what happens then, and if there is any momentum for the yields to stabilize. But we are seeing in real time a real flight to quality. Right? It should not come as a surprise. If you've been part of the channel, if you've been part of our Discord, I've been talking about this for weeks now, and how high the yields are, considering how they got up to as much as 5%, 5.1, 5.2%. It only took one single trigger in the financial system for everyone to flock over to yields, considering how high they were. And now they're down 0.3% in one single day. So pretty significant fallout for the 10-year yields. So, and yes, the market's pricing, that is another really, really dangerous part, in my opinion. The market's now starting to price in. No hike. No hike is the name of the game right now. And we are expecting 54%, according to Fed Funds Futures, expecting the Federal Reserve is going to literally not deliver any hike on March 22nd, which I'm a little bit concerned about because, we have been... in all of 2022, in fact, the market's pretty much expecting all cuts in 2023 and 2024. And even though those are the expectations, markets are rolling over. So what you can see is the SPY last time I checked was down pretty significantly, down over 1%. We've got the QQQs down 80 basis points and the Dow Jones selling off about 1%. So even though the market's not pricing in any hikes anymore, in fact, we're pricing in cuts, we're still seeing the markets roll over. That is what real fear kind of feels like in the markets right now. Because even though we're getting some good news, not really good news, but the markets anticipated good news on literally no hikes anymore, markets are rolling over. So it's going to be quite an interesting day and quite an interesting week. This was on CNBC, which I found a little interesting. What we don't know about the SVB's fallout is how this is going to impact the Fed's monetary policy. We already have a little bit of an anticipation for the market's Fed Funds Futures that we are pricing in no hikes, but we don't know the answer to that, how this is going to actually affect Jerome Powell and the Federal Reserve and their conversation around monetary policy. Will uninsured deposits feel safe in smaller banks? More likely so they will. But right now in the morning, the liquidity shift is so massive. I mean, yields alone being down 8%, 10-year yields is telling us enough we need to know about that the companies are not feeling safe with uninsured deposits in regional banks, and they are moving over to treasuries right now. How will banks pay for depositor guarantees, and where were the bank regulators along with everything that was going on, and can banks fix duration risk in a year? So in the next year, can banks actually fix that duration risk? Because a lot of the banks, as we know, are still underwater on their bond portfolio because they have invested long-term, they've lent long-term, even though they're working with deposits that might be a little bit short-term. So that's the duration, that's the interest rate risk that they are dealing with at the moment. So there's a lot to go over. There's, definitely there's been so many things happening at the same time. And Oleg is saying you're panicking more than the Fed. Take it easy, as we are now on zero hikes. Market will correct. I mean, this could be seen as a buying opportunity, but really this is from a depositor standpoint, this is not really a time to be panicking because there is unlimited insurance now across the board. But just from a market standpoint, I do still think there is going to be that shift away from equities over to treasuries, what we are seeing right now, and bond prices are moving up, right? That's why we have, like in our Discord, that's why I have a long opportunity on TMF. That's why I've got a long trade. It's a straight up hedge on the bond prices, right? This is exactly what we talked about last few weeks. And one of the reasons why we did have a trade idea on TLT and TMF is to hedge equities against bonds. Because as investors move out of equities, go into bonds, into treasuries, bond demand moves up, prices higher, yields drop, and as a result, TMF, TLT do much better, and it's a good hedge against equities. So that's kind of like what we are doing right now. So Purna says, finally, my leverage inverse ETFs are printing. That's great. Congratulations. Yeah, so right now we do have the poll, 67% expecting red from the markets. We do have President Biden speaking in under 6 minutes now on banking system after SVB collapse. So we'll be kind of listening in on that a little bit. We'll see what he has to say, and then we'll see markets' reaction to that as well. But yeah, 66% no hike. The market definitely is anticipating, which in my opinion is a little bit more on the dangerous assumption side. We'll find out soon enough, because if you think about it, it was just a few days ago. When Jerome Powell gave that testimony and pretty much suggested that the Federal Reserve needs to go higher in terms of their fight with inflation, and they are going to be raising rates higher for longer. And then immediately, 3 to 4 days later, you can't expect the Federal Reserve to not do anything. Of course, there's been a big trigger, a breaking point with SVB, Silicon Valley Bank collapsing, Signature Bank, and even First Republic Bank, which is down like an insane amount right now. It's down 62% pre-market. I think it's been halted at the moment. It's down to $30.70 pre-market. So pretty substantial volatility here. And the most important thing is the VIX, right? Definitely moving up over 23%, back up to 30 levels. Yeah, so Lauren, it's definitely the risk reward has shifted a little bit. My first entry was at 780 on TMF. So it has moved up quite a bit, but I have been dollar cost averaging a little bit as it's moving higher. But yes, the risk reward profile has definitely shifted. This was the entire trade idea for TMF. So definitely, from 7, yes, low 7s was the better sort of risk reward alignment. But even from like here, I mean, I do still expect the yields to move lower. I do still believe that yields are going to be tapping out at some point. They are going to stabilize, but I do still expect a little bit more downside on the 10-year, which is going to move a little bit more, put more upside on the bond price ETFs as well. Crude oil prices down 4.9, almost 5% here. So selling off. Once again, we're coming down to that support at around low 70s, $73, $72. So that's going to be that green rectangle for us to watch. And we've got Ethereum here with a very nice pop. Went up a little bit over 7%. And of course, Bitcoin also moving right back up, pushing up to back over $22,000. So I'm going to do an audio check. How many banks so far? So I believe it's been 3. Silvergate, Silicon Valley Bank, and Signature. First Republic is definitely being, I think, investigated, or there's been talks about that as well. But I believe there's going to be more regional banks if, of course, because interest rates eventually we knew it was going to be a breaking point, right? They are going to start to affect and things will start to break. And that's what we're seeing right now. It's kind of play out in real time. So I'll do an audio check here just to make sure that everything is working well in about 3 minutes. But again, investors kind of rush into bonds, gold in flight to safety after SVB rescue. As a result, yields have been coming lower quite a bit. We already talked about the Fed funds futures. Again, expecting cuts after cuts in all of 2023. And of course, going into 2024 as well. So it's going to be quite an interesting week with inflation scheduled on tomorrow at 8:30 a.m. Eastern. It's going to be quite the week here. So Danny says Ally Bank is next. Yeah, so Ally Bank also is in a very similar situation. They're also holding on to their losses on the bond portfolio. So we could definitely see that play out as well. So Ally Bank down over 9.5%. Talked about it over the weekend. Did a video on this. And how Ally Bank also, it's actually holding on to much bigger losses than Silicon Valley. It's actually holding on to $4 billion worth of losses versus Silicon Valley Bank, which had about 1.9 billion. So yeah, down about 9.5% here. So, all right, a minute 30, and we'll see what President Biden has in store for us. Kevin saying, still trying to get used to this new time, still haven't fixed my clock. Yeah, I mean, that threw me off a little bit this morning. I got to tell you, I was like, what is going on? And it's already, like, before you know it, it's already 9 a.m. Eastern in the U.S. So yes, because of the daylight savings, I think 1 hour, we just went 1 hour behind compared to the U.S. And I think the U.S., I don't know if you guys gained an hour or not, but definitely there was a little bit daylight savings March 12th, I think. Yep. So Ed, that is definitely a concern. The more the Fed prints, the higher the inflation expectations, or it's only going to cause more potential concerns around inflation in the future. But again, one of the things that people have to understand is that this is not a bailout on the Silicon Valley Bank, but it's more on the depositors. And yes, I understand the argument, which is the FDIC only insures up to 250,000. So why pretty much go all the way across like unlimited? But we really have to understand, which companies had their money in Silicon Valley Bank, and of course, the people that are working for those companies, right? That would have created just massive amounts of unemployment and a lot of chaos across the board for the working class. So I think the real question really for the market is going to be what the Federal Reserve does next week. As soon as that starts playing, we'll be ready to go. Tesla here coming up with a downgrade, I think, pre-market. And it is pulling back a little bit over 3%. So received downgrade from Wolf Research, which cut its rating on Elon Musk's EV maker to pure perform from outperform. Roku dipped in the pre-market because, of course, they've got 26% of their cash in Silicon Valley Bank. So let's take a look at how much they are down. 4.5% right now pre-market. Kramer, if anybody wants to listen to him, he's on CNBC right now. Let's see. Yeah, Kevin, Fed emergency meeting at 11 a.m., but I doubt that that's going to be like anything market moving, because we've had those meetings in the past. Again, the Federal Reserve has had these emergency meetings. I don't know why they get overhyped so much. It's not like this is the first time they're having this. They've had these meetings before. Closed doors, emergency meetings. They do them like I think 6 or 8 times a year. They do them. So I don't think it's going to be a big market moving event. Of course, we're not going to get a lot of information out of it anyway. But what are you looking to purchase the most in this environment, Caddy? So JLS already pointed out bonds is where my focus is right now, considering the yields rolling over. And again, that's what we've been talking about over the last few weeks here. And I also posted trade ideas for all the members. TMF was definitely on part of that. It's already moved up. $10 is that target, that initial target, but we'll see if the yields have more lows to form, and if they can obviously get lower, that's going to be more upside for TMF and TLT. All right, so I'm going to do an audio check just to make sure that everything is working. So let me know if you guys can hear that. I'll play that once this is started.
For California, I want to briefly speak about what's happening in Silicon Valley Bank and Signature Bank. Today, thanks to the quick action of my administration over the past few days, Americans can have confidence when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured, rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law. And finally, we must reduce the risks of this happening again. During the Obama-Biden administration, we put in place tough requirements on banks like Silicon Valley Bank and Signature Bank, including the Dodd-Frank law to make sure that the crisis we saw in 2008 would not happen again. Unfortunately, the last administration rolled back some of these requirements. I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses. Look, the bottom line is this. Americans can rest assured that our banking system is safe. Your deposits are safe. Let me also assure you, we will not stop at this. We'll do whatever is needed. On top of all that, let's also take a look at a moment to put the situation in a broader context. We've made strong economic progress in the past 2 years. We've created more than 12 million new jobs, more jobs in 2 years than any president has ever created in a single 4-year term. Unemployment is below 4% for 14 straight months. Take-home pay for workers is going up, especially for lower and middle-income workers. And we've seen record numbers of people apply to start new businesses, more than 10 million of them, more than 10 million applications over the last 2 years starting businesses. Now we need to keep this progress going. That's what swift action that my administration over the past few years is all about. Protecting depositors, protecting the banking system, protecting the economic gains we've made together for the American people. Thank you, God bless you, and may God protect our troops. See you in California.
Mr. President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect?
Do you expect other banks to fail, Mr. President?
Should all depositors be protected at all banks?
All right, so quick little speech there, just kind of reiterating what we already know, so nothing new. And this is, I think, the straight statement from FDIC, Treasury Department, and the Federal Reserve, kind of mentioning that stock and bond holders will not be protected, and of course, depositors will be protected at unlimited limits on the deposits that they had. So, yeah, creating jobs out of thin air. Doesn't even know what he's reading up. It's very clear, right? And you can already tell, like, he is reading kind of like the teleprompter in front of him. But of course, in my opinion at least, lacks a little bit of conviction kind of coming across, knowing what are you actually talking about. But anyway, so back to the markets here. Again, we're still pulling back, still down on the day so far. Yields are still rolling over as there is a bit of a shift away from equities over to bonds. Tesla's still struggling after the downgrades, down over 3%. We've got Microsoft flat, Apple here just down about 0.5%. And Google down about 65 basis points at the moment. XLF, which is going to be your financial services ETF, down almost 3%. And we've got FAS, which is a little more on the leverage side, down a little bit over 8.5%. These are more on the banking sector. A lot of their holdings are banks, mostly large banks, but they're also selling off quite a bit right now. I do have videos coming out later today on certain ETFs that I do think are going to be potential opportunities in this environment. Vertex here is mostly flat. And then we've got Ulta here starting to a little bit roll over 90 basis points, mostly consolidating sideways at the moment. But we do have a bit of a rising wedge pattern on Ulta, definitely on the radar for a potential short on Ulta, as well as it's kind of getting up to that resistance of 533. So in terms of earnings, we didn't really have a lot of earnings reported. But let's see. Jolly's saying today's the day capitulation is coming. Caddy, too late to get into TMF. So unfortunately, it is success over stress. First time watching you, seem very knowledgeable. Subscribe. Thank you so much. I appreciate it, and welcome on board to our community. Yeah, happy to have you, man. Thanks. But TMF, it's just about risk and reward, right? Every time I mention, like, if the risk reward shifts, now you're working with completely different risk reward parameters than the next person who took the trade maybe before you, right? So in the case of TMF, now I feel like, the $10 exit and a potential stop loss at 750, it's not worth it, right? You're working with this right here is going to be your risk reward profile, where you'd be risking a lot more than what your potential target is. So ideally, obviously you want to look for asymmetric bets where the risk is, moderate to low versus a lot of potential for reward. And that's where TMF was, back in $7, $7.80s, around those levels. And as the yields have rolled over, I do still expect the yields to come down even more. But with TMF, I think my target's closer to $10, at least in the short term right now. So Oleg, man, always the purple bull. It's crazy. Come on, you gotta be realistic a little bit. We will have a nice rally as new fund, savings fund, in other words, quantitative easing. Oh man, I love it. No, I love it. It keeps us in check. Definitely. Keeps the rally side of us in check, right? If you're expecting a more sort of bullish bias. Zim was green, dividend payout $6. Yes, be careful with Zim integrated shipping. I've done several videos on that company as well because of the shipping rates kind of rolling over. We have seen Zim integrated also pretty much, collapse from highs of $61. It's, dropped about 73-74%. So we have seen a pretty substantial move down in Zim integrated shipping. It kind of starts to feel like it's forming a bit of a cup and handle. So, this can be seen as a bit of a cup. We're starting to see a bit of a handle. So wouldn't be surprised to see a further break to the upside, or you can also start to see a potential inverse head and shoulder. So this can be the shoulder, a potential head, and another shoulder forming with a potential breakout to the upside. So Zim integrated in most cases, technically speaking, is forming some good patterns for a potential break to the upside. Yes, we can take a look at the VIX as well. So Matthew, why buy TMF over buying treasuries online or from broker like Schwab? Thanks. So, well, those are completely different things. If you're buying a bond, obviously you're holding on till maturity, right? And the process is much longer. You're not going to be able to, there's no liquidity there because once you've bought the bond, you're pretty much holding on for much longer until maturity, right? If you do kind of break that before, there's going to be penalties and whatnot. With TLT and TMF, they're more bond price ETFs, and this is more of a trade as anything else, as opposed to anything else. So that's why that was the idea behind going long on these ETFs, is to take advantage of the yields coming down and the prices going higher. With the Treasury Direct or your brokerages, yes, you can absolutely go with actual bond yields, and if you lock in a good rate, right? 2 years, just a few weeks ago, we're trading at over 5.1, 5.3%. If you lock in that rate, that's phenomenal, right? That's great. You're getting paid 5% for the next 2 years on an annualized basis. So obviously that's why the incentive for stocks was not really there in the short term, considering there was so much uncertainty. And that's why I was calling for that flight to quality for some time, that investors are it's going to be a no-brainer investment to be investing in, 1 year, 2 year, 5 month, 6 month treasuries. So in my future videos, in fact, we're going to be starting that out later this year. With all the members, along with the wheel strategy, I'm going to be looking at building a bond ladder. So we're going to be focusing on T-bills with the shorter maturities, 13 weeks, 17 weeks, and 26-week maturities. And we're going to be building out a bond ladder for us to kind of keep that cash secured and safe, right? So if anybody's interested in that, you can ask questions. Of course, join us once we start to build that. T-bills are capped at $10,000 per year, Kevin. I don't think so. I think you're talking about the I-bonds. I-bonds are capped at $10,000 per year per person, but T-bills, I think between treasury bonds, notes, and bills, you can buy them as much as the limit's 10 million, I think. That's the limit. No, they can't be capped at $10,000. You kidding me? T-bills? No. I mean, there's so many institutions, hedge funds, banks, businesses, companies, individuals that buy treasuries every single year. I think I-bond is the one that you're maybe referring to. Anyway, am I paused right now? I just want to make sure. All right, perfect. Good. So Matthew, thank you so much. I don't know what's going on in the audio. Like, it was fine up until just a few days ago, but then all of a sudden it's like all out of place. What is the decibel? What is the decibel that it needs to be at? Just so I can make sure every time that I'm talking, it's the right decibel. I'm just going to fix this for once and for all. Right now it's coming up to negative 1.5. That's how high I've got it to. But what's the right decibel number? Because I want to make sure that the audio is good. I've been getting a lot of comments for audio being either too low or too loud or clipping. Just want to get it right. So this has already happened. We don't have to go over that. But let's see if there's any changes in the expectations from Fed Funds Futures here. Oh, we're back over to 25 basis points. No hike, not anymore. 80% probability that we're going to see 25 basis point hike from the Federal Reserve on March 22nd. Audio is fine now. Okay, that's good to know. Perfect. All right. So yeah, back to the markets here. A little bit of consolidation. We're going to end the poll and we're going to start a new poll. Audio is good. Perfect. We're going to do a new poll now. Now, this is going to be a more important poll, which is on the Fed. So Fed will pause, no hike, raise 25 basis points, raise 50 basis points. I'm actually going to add here, cut 25 basis points. So I'm going to have to move these down a little bit. 25 basis points. All right, so we've got the poll. Fed will cut 25 basis points, pause, no hike, no cut. And then raise 25, raise 50. Let's see what the poll is going to be. I'm expecting at least a 25 basis point hike, but we'll see. Chirag says, let the bank runs begin in T-minus 15. So you know how much money was withdrawn from Silicon Valley Bank in the last week? And this was the biggest bank run in history. I just learned that today. The biggest bank run in history from Silicon Valley Bank. Anybody want to take a guess? How much money was taken out of Silicon Valley Bank before this went down? Like during it went down on Thursday, I think. Anyone want to take a guess? And bank runs are no longer like what you saw back in the 1930s, right? It's not like people kind of sitting, in front of the bank, kind of like long lines or anything. You could still see that, but most of the bank runs now in the digital age happen over the phone, right? With a click of a button, you got your bank, you got kind of withdrawing your money. But Milan says 1.9 billion. That was a loss that the company took. 1.9 billion was a loss that Silicon Valley took on their bond portfolio, on their MBS portfolio. Developer artist says 45 billion. Didier says 43 billion. Sensa says 42 billion. It was close to 42 billion. $42 billion was, I think, the correct answer as far as I remember. Yes, $42 billion is what was withdrawn in the last like couple days, Thursday, Friday, from Silicon Valley Bank alone. And pretty crazy, right? The biggest bank run in the history of the United States. Absolutely wild. $1 trillion, Freddie. What do you think this bank was? No, some great answers here, but okay, 53%, 25 basis points. We do have 4% expecting the Federal Reserve to cut 25 basis points. And then we've got 24% expecting a pause. And again, majority expecting at least a 25 basis point hike from the Federal Reserve next week, which I think is a very reasonable thing to do, but you never know. The Federal Reserve may get pressured into pausing. It all actually depends on the inflation report. Now, there's a couple different scenarios, right? What if inflation comes in extremely hot, right? What if inflation comes in a little bit hotter and starts to accelerate back up, right? What does the Federal Reserve do then, right? Then I think it's going to be most certainly 25. Then it might be between 25 and 50, right? Because if the inflation report comes in super hot, then the market might pivot then and go to 25 or 50. But inflation comes in really, really good. If it comes in, to the downside, big surprises. We see year over year kind of dipping below 6%. Core comes below 5.5%. Month over month, we don't see a big change. Then I think no hike is going to be very, very likely from the Fed funds futures. I think the market will start to price in a pause from the Federal Reserve. So Jay, should we remove money from our banking accounts? No, man, you're fine. You're safe. Don't worry about it. As I was listening to Mohammed El Arain this morning from CNBC, and he also mentioned like there is going to be some panic, which is fine, but I don't think the panic needs to kind of have that contagion effect because FDIC first of all, and again, make sure to watch that video that I posted over the weekend talking about how to make sure that your deposits are safe. So you're working with, banks that are systemically important banks. You've got accounts that are FDIC insured. You've got brokerages that are SIPC insured. You've got CDs. You've kind of got multiple accounts. Deposits are spread across different accounts with treasuries, AAA rated bonds, or corporate. And then you've also got, credit unions that are part of the National Credit Union Administration. So there's a lot of different ways to make sure that you are safe in the rare event of a bank or a broker going down and failing. And it's not just banks, right? I mean, brokers go down too. Like brokerages also do fail if they do take on massive risk with the deposits that they have. So Tristan, are brokerage firms going to be backed? Are investments going to be backed? Not the securities themselves, but the money behind them. So yes, make sure that you check out the video I posted literally, over the weekend talking about to make sure that you are safe with your deposits. Brokerages come under a different insurance policy called the SIPC. That's your Securities Investor Protection Corporation. It's very similar to FDIC. They've got different limits and different coverages, but there's a whole list, right? So you can actually go over, let's just see, SIPC members. If you simply type that in, list of members, SIPC. So if you're working with a broker that's part of this list of members under the SIPC, chances are you're covered. So for example, let's say I have TD Ameritrade. You come over to T, you come down, scroll down the list, and let's see, TD Ameritrade right here. They've got multiple TD Ameritrade Clearing, TD Ameritrade Incorporated, right? So you've got that. Even I know the Webull is pretty popular. So if you come over to W, scroll down the list, and you're going to find Webull somewhere. You've even got Redbird Securities, right? Webull Financial right over here, so from New York. Wealthfront is kind of like a robo-advisor, right? So they're also part of it. Let's take a look at Robinhood. So R, you come down the list, and you're going to probably find them too. Robinhood Financial right here. So Robinhood Financial, Robinhood Securities. Again, kind of go through that list, make sure that you are trading with a brokerage that is SIPC insured, and of course same thing with the bank as well, right? It's all about reading the fine print. It's boring, but it can definitely help you in situations like these. But right now we understand the Treasury Department, FDIC, everyone's kind of stepping in to backstop everything that's going on in Silicon Valley Bank and Silvergate and all the other banks that are involved. So they're not going to let anything happen to the deposits of companies and individuals. Trishan, but Biden didn't speak to investments as deposit. Yeah, because it was Silicon Valley Bank, right? It was a bank, not a brokerage. So bank mostly is overseen by FDIC. If it was a brokerage, a big brokerage firm, God forbid, if it were to go down, then you'd be working with that brokerage, SIPC, and that's what they would be focusing on. But yeah, since it was a bank, that's why FDIC is involved. Yenser says, put your money in the big four. Yep. So that I think is also what's happening right now. We're seeing a bit of a consolidation in the liquidity. And I was again listening earlier where there was reports that there's been a lot of calls going towards the big four, kind of opening up new accounts just this morning. So I'm sure there's a lot of activity happening as we speak right now on Wall Street. There's just been so much money just kind of going out of regional banks over to the big four. And maybe even treasury securities. At some point, to some degree, it's also a little bit of incompetence from the CFOs of these companies, especially for companies that had a big chunk of their money in one single bank. If you think about Roku, right, for example, their CFO definitely dropped the ball if you've got over $400-500 million in one single bank. Right, you've got 26% of your cash sitting literally in just one bank, right? So that is, I think, a little bit incompetence as well, not being talked about enough. But that, again, for example, Payoneer, for example, had only 1% of their cash in Silicon Valley Bank, and they also released a message saying that their deposits are going to be spread across many different. Let me see if I can bring that up. So I read that over the weekend. So message from our CEO, and Payoneer was also part of it. They mentioned that customer funds are 100% guaranteed by us, available, accessible, and not at risk from the closure of Silicon Valley Bank. And they mentioned that Payoneer account are available, accessible to you in a normal way. Customer funds are held with Payoneer, are not at risk. And they mentioned that keeps a vast majority of funds, including customer funds, at globally systemically important banks, so GSIBs, which I mentioned in that video. So make sure that you do check that out if you haven't already. But I did talk about, systemically important banks, which are including the big four. And Payoneer has ample liquidity and capital on hand. Customer funds held with us remain available, accessible to you at all times. So it also goes to show, even the CFOs in those companies were not taking the right action, kind of putting all the money, or big chunk of their balance sheet cash just into one bank, which is, in my opinion, not the wisest thing to do. Yep. So any business owner not putting any excess liquidity above 250,000 would be monumentally dumb. Really, it's all about just. There's a lot of tools available for businesses, right? You can obviously have multiple different accounts. You can even have CDs, and these are cash that's kind of considered working capital, right? You need to make payroll. You need to have that available. So even U.S. Treasuries are an option for these companies, right? For CFOs to kind of build out these T-bond ladders and really kind of 3 months out, 6 months out, 12 months out, and just kind of had them at maturity so that liquidity, that flexibility is still available to them without having the risk of default, because it's backed by the full faith and credit of the United States government. So I think that's also a little bit incompetent from their positioning. Derek says nothing is safe right now. That's true. That's how I felt over the weekend when I was thinking about the whole situation. I was like, man, a bank like Silicon Valley Bank, if that can go down the way it did, nothing is safe. There's literally no safety. But that's the world we live in, right? There's always going to be some level of risk. Right now, we think the U.S. bonds are the safest, or AAA rated over in Singapore, or Switzerland, and Australia. All these AAA rated countries and bonds are the safest ones there are, but even they are not safe, right? Even they've got a very, very small degree of risk. That's why I mentioned it in a funny way that if you've always got that one option of kind of stashing cash under the mattress, which is always going to be that traditional way of saving money, but obviously you can only do so much with that, and at the same time you're going to be losing your purchasing power. with inflation. So, but no, that's a good point. I was thinking about that over the weekend. I was like, there's no safety anywhere, you know? It's like, even with simple deposits, there's risk. So Srinivas, thank you so much for joining. It's been a long time since you've been here, so thank you so much. Do you think we can see more downside in this market? So, and as I've already mentioned that from an economic standpoint, there are still high levels of probability that we're going to see a recession. Inflation's still a problem for the Fed, for the market, for the economy. It's not disappeared just yet. And again, we're going to get another print here tomorrow at 8:30. But when it comes to the Federal Reserve, this might be a bit of a wake-up call, because we are seeing a breaking point here with Silicon Valley Bank, but I do still believe the Federal Reserve is going to be on their fight. Still, they're going to keep at it with raising interest rates. They're not going to tap out until inflation comes down. And they've mentioned economic pain. This is what that economic pain looks like. This is exactly what they talked about. So I don't think they're going to stop. And I think this might put us into a recession, economic recession, by the end of this year. So that being said, I mean, when a recession happens, consumer spending drops, earnings also pull back, which could lead to the markets pulling back as well. So I'm not super confident about a lot of upside here in the markets, considering that the price earnings multiple is still a little bit elevated. Mill says, watch caddy is the safest among all. What does that mean? Do you mean like a safest as in like in what context? Lauren, you have to buy physical gold. Yeah, so I do have some gold, coming from India. Gold is pretty popular here. So yes, I do have some, but no, I think I wouldn't mind kind of buying more. I wouldn't mind kind of storing a little bit more of that physical commodity just as a store of value, obviously. Anyway, market's opening in about 4, 3, 2, 1. We are ready to go. S&P 500 here, it's going to open in at around 1% down, 30 at 21. We've got the NASDAQ here opening down also close to 1%, 90 basis points, 11,000 is where we're at. And the Dow is down about 73 basis points, with the Tesla really struggling, down about 3% at the moment. So lots of selling pressure here for Tesla right off the bat because of the downgrade. Nvidia is still holding up, man. I don't know how Nvidia does it. It's only down 70 basis points right now. We got Google slightly lower, Apple's green now, and Microsoft slightly down as well. Crude oil prices, once again, seems to be buyers stepping in at around that support, came down to low 70s. Same story, just a different day for crude oil. TLT is up 2.5%. TMF is up a little bit over 7.6%. So man, what a 2 gap up days here for TMF. Absolutely wild. Satish, TMF on fire already. He may fire more this week thanks to Caddy. Yes, so appreciate that. And congratulations on TMF. And we could see $10 soon, David. Yes, you're right. $10 could happen sometime either this week or maybe even today. You never know. Volatility is still higher, 22% back up to 30 levels. So 35 is going to be next. This is definitely a pretty big move on the VIX over the last 3 days. It's gone up 65% already. How low can Bank of America go? Let's take a look. So Bank of America down 5.5% here. Obviously selling off with the entire... Let's take a look at banking sector here. What do we got? So we've got Credit Suisse down 8%. BNB Paribas down 6.7%. UCG or UNI Credit down 8.5%. Bank of America, UBS, Wells Fargo, SoFi, Deutsche Bank, Barclays. Everything is red except for... Well, that's a currency pair. I'm going to delete that. So yeah, pretty much everything is red, especially some of the more traditional banks still selling off. We do have a support around here, although we are trading below that level at 28.59. We'll see if buyers step in here. I'm not going to write that off just yet. We could still kind of see a longer wake on the downside and the buyers step back in because Friday, look at that, lots of consolidation. It was a doji candle, So pretty much an indecisive day for Bank of America. So if this level of support doesn't hold up, right, if we do see some more momentum on the downside, then the next support I'll be watching is going to be closer to 24. So this is going to be that next level. A lot of validation here for Bank of America at those levels. But yes, definitely very oversold from a technical standpoint. Yeah, regional banks, PNC Financial, US Bank Corp, M&T Trust down 875, 14%. Let me just see if I can add some of these over here. M&T. Yep, so they're down 14%. Trust is, PNC down almost 8%. MTB is down over 5.8. Banks absolutely getting destroyed, no doubt. Yeah, First Republic is down 65%. Wow. And this one's gone off the listings. SIVB. Still expecting a hike, 25 basis points. And from our poll, 46%. By the way, make sure that you do vote if you haven't already. We've got 600 people watching, only 112 likes. Come on, what's up with that? If you guys are enjoying this live stream, if you guys are getting some value out of this, make sure that you drop a like. And don't forget to also vote as to what you expect the Federal Reserve will do next week with respect to interest rates. S&P is still rolling over here. Now, when it comes to the overall trend for the S&P, I feel like it's going to tap out at 37.74. I think that's a level that we can get down to today. It's really not going to be that much. That's like another 1%. 2% down day is normal for the S&P considering what we have seen. The last 2 days, of course, Thursday, Friday were brutal. Might as well just tag along another third day to that. So 37.74 is going to be that support area here. And the NASDAQ, we've got a level right now pretty much sitting at previous resistance, right? Previous lower high. So if you do break down, then, you know, October lows are actually not that far off, only 7% off from where we are. Jeffrey, thank you so much. Appreciate that. Joster, appreciate that as well. Yeah, TFC dividend yield 5.25%. So that's one thing that you will see with a lot of these bank stocks is that as prices are coming down, yields are going higher because of that inverse correlation. So First Republic Bank, a 1.32% dividend yield. We've got, let's see, other banks that are down. TFC, dividend yield at 5.3% now, considering how much it's down right now, 20%. Credit Suisse, dividend yield 1.4%, but this got separate problems of its own. PNC, 4.3% dividend yield now, considering that it's down 8.5%. So you are definitely seeing as prices come down, yields go higher. And there's always that inverse correlation between prices and yields. Tesla, 165. There we go. Really rolling over. Nobody's talking about Tesla right now, is it? It's all about the banks. It's all about financial institutions. But Tesla, poor Tesla, selling off quite a bit. 4.5% is a pretty sizable move for today. Starting to see a bit of a breakdown below 160s. We'll see if any buyers bite at those prices. But if they don't, we do have a gap to fill here in the 150s for Tesla, which is not going to be good. Yeah, Tesla free fall. JT, is there a link for the public Discord? I don't think I have attached it, but I will include it definitely in the live stream after it's over. So I'll include it in the comments and I'll pin that for everyone to join. Yeah, price target for TMF is $10. For Google, we are seeing a bit of a pullback here along with the market, so we're definitely coming down. Now there needed to be a stop loss in place. In other words, a moving stop loss, which we talked about when it was moving higher. But in my opinion, the valuation once again is coming down to far more reasonable levels than what we have seen before. So $90, I mean, Google's pretty much at its 52-week low, right? It hasn't really moved up from those levels from back in November. It's still only up 8% when compared to Tesla, Nvidia, Apple, a lot of these companies that have moved up 20, 30, 40, 50%. Google is still only up 8%. So from a valuation perspective, yes, I think Google is still a good, decent DCA opportunity in my opinion. But from a trading standpoint, of course, it's rolling right back down with the entire market. TTCF is crashing. So GitLab, so they are reporting earnings after the markets close, right? If I'm not mistaken. So their expected EPS of negative 14 cents, revenue of $120 million. What we are really seeing is a lot of consolidation. So this right here can be validated as a support here. We'll see if buyers step in here, and this is the very, very small higher high and higher low pattern for GitLab, and a much stronger support sitting roughly at 32.17 in line with this previous support for the company. So those are going to be some levels to watch for GitLab. So Max, please look at SCHW. I believe that is Charles Schwab, if I'm not mistaken. Yep, so that is the company here. Wow, down another 19%, so also selling off quite a bit. This is our banking watch list, right? Banks, all of it. And what you'll notice is major banks, 25%, regional banks, 21%. This is just the watch list here. And if you take a look at, man, oh man, the damage here. 65%, 60%, 19, 19, 9, 9, 8.5, 8.2. Just a lot of momentum to the downside here. Yeah, a little bit of a free fall for Charles Schwab as well. And I think it is halted. Max, to answer your question, it is halted. Gold is up 2%. So we are seeing Spider Gold Trust move higher. And gold prices also, look at that, 2% move. Getting up to almost back up to 1955 here, and 2070 as being the big peak. Those are going to be some levels to watch. And from November of 2022, it's pushed up 22%. We all know who's going to be happy if gold is pushing higher. Let's take a look at silver. Silver is also on the move, 5.5%. Not bad, getting up to that resistance here at 21.64. So Tesla cash good puts might be on the cards today. Let's take a look at the premiums and let's see what we're working with. Hopefully Webull doesn't crash on me today, as it always does. But let's see for 1 month out, 32 days out. 164 is where it's at. So 150 puts paying you 450, which is not bad, but 150 is kind of like, you know, Tesla could get down there. 145 is 345. So we're working with 136.55. So 2.35%, not bad, not bad. So 145. Delta's a little bit higher. I would ideally like it less than 0.2, so 140 is even good. Let's see if that one yields over 2%, 137, 137.36. That's 1.92%. It's a little bit under 2% for a return on collateral. But 140 definitely puts us a little bit on the more safer side. Because Tesla getting down to 140 here and eventually getting down to 136. That's going to be the cost base. It's going to take it 18% more downside in the next 1 month. Well, we've got inflation. We've got the Fed. Got the GDP numbers coming out. We've got the unemployment in the first week of April. So yeah, I think it's possible for Tesla to come down 18% in the next 1 month. I would wait until if it gets down to 150s, and I would be very, very interested in maybe selling some cash puts. Yeah, Comerica down 35%. We talked about Comerica as well. That's another bank that we mentioned in that report, which was holding on to some heavy losses. So again, it wasn't like it's obviously down 35% here. And Ally Bank is also in a very similar situation, down 13% also. So a lot of these banks were holding on to a lot of losses. It was just a matter of time. It was a ticking bomb for most of them, but SVB kind of ended up going down first, and then it just started off this contagion effect across the board. Yields are getting slammed. Yes, yields are. Yeah, gold price is moving up because of the banking scares, no doubt. Can you please check out Snow? Let's take a quick look. By the way, S&P update here, down 1.2%. We got the NASDAQ down 1.27, now under 11,000. We got the Dow dropping a little bit over 55 basis points. Really just being held up by some of the tech stocks here. So Amgen, actually not tech stocks, more like value stocks. Amgen, Procter & Gamble, we got McDonald's, Johnson & Johnson, Coca-Cola, Home Depot. More the value side kind of holding the Dow higher. And of course, banks, JP Morgan, Goldman Sachs, selling off quite a bit along with energy. And then Apple is kind of flat on the day. So not really doing anything. So Snowflake, we've already talked about this. I think the valuation's still too high, trading at, several multiples of sales. So the market cap right now is 41 billion, last year's sales, 2022, 2 billion, so we're working with 20 times sales, a little over 20 times sales. That's a bit too high for me. Even as a software company, that's incredibly high. I mean, for comparison, only Nvidia trades at 21 times sales, and they're extremely profitable with a, phenomenal potential. Microsoft, 12 times sales, Apple, 6 times sales, Google, about 5 or 4 times sales, Meta, even lower. I think Palantir trades at 10 or 12 times sales. So definitely trades at a bit of a higher multiple for me. So I'm looking for like at least a 50% decline from these levels for it to be more or less reasonable. But support level is going to stay put at 109 here for Snowflake. Yes, we already talked about Zim earlier. Zim is up 17% this morning. We already talked about that one. Comerica. Got it. So planning some buys on VIX, at least up to 40s, 40, 45. So again, right as it says over here, net buyer and cash good puts at 40, 45 levels. Those would be some extreme levels on the volatility, and where I would like position myself as a more of a net buyer and dollar cost averaging a little bit. Again, it's not like so cut and dry. It's not like black and white. As soon as VIX gets up to 40, 45, like an immediate buyer. But looking at the valuations as a whole on the S&P as well, because the valuations on the aggregate on the S&P are still a little uncertain, considering that the EPS estimate for this year is still pegged at 222, which is gonna get revised down in my opinion. And as Professor Demodron also mentioned, last year, that analysts are either in denial or very slow to cut down on their estimates. And since June of last year, we've come down from 250 down to 222. Like, that's how many revisions we've had since June of last year. So I think there's going to be more as the entire sort of interest rate and economic picture plays out. I think there might be more revisions. And, bottom line is I'd be comfortable buying the S&P at around 15 times earnings. So at 15s, we're looking at 254, which is not going to happen. So even if you come down, let's say 200, so 200 times, well, that's going to be too brutal for me to even bring up. Let's just work with 210. 3150, that's going to be closer to 3200, which again, it's going to be, I know it's not what everybody wants to hear, but from a math standpoint, 15 times earnings with a worst case scenario of $210 earnings per share for this year. Rest is all just a product, right? You're just multiplying 15 times 210. If you're willing to pay 16, 17 times earnings, and of course you've got more flexibility, you're working with 3570, that's going to be almost a low from October. But if you're working with, let's say 16, 3360, if you want to pay a higher multiple, say 20, then you should already be a buyer in this market considering the multiples you're paying. By the way, did anybody hear HSBC buying the UK arm of Silicon Valley Bank for a record? Did anybody hear that? That was pretty interesting news, right? They're not down as much. Obviously, they're down 2.3%, but does anybody know how much they bought it for? The UK arm, the Silicon Valley Bank's entire UK arm, HSBC Bank bought for a staggering number. Like, that was an unbelievable number. Can't believe it was still worth that much. Yes, the dollar. It was actually £1, so it was $1.21. So yes, £1, which is like $1.21. Absolutely crazy. All right, so market's rebounding a little bit now. We're starting to see some momentum back up. The yield settled at 3.5% with the Dow Jones flat. We've got the NASDAQ pushing back up, and we've got the S&P also recovering a little bit. Let's just quickly go back over to the watch tool. Yep, still expecting a hike of 25 basis points, 85% probability still expecting. But a lot of this move coming from Google. We've got Tesla here recovering really well. And Microsoft just pretty much flat at the moment. Oil prices is kind of like clockwork. If anybody wants to take a trade on oil, be my guest. But this is like literally textbook. Every time it comes down to low 70s, buyers step in. Every time it gets up to low 80s, sellers step in. I mean, this is just such a tradable pattern here. Lots of consolidation back and forth here. Just boom, 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 boom. It's just been trading sideways at that support and that resistance. I'm sure we've got some ETFs to look at. Let's see. Forgot what the ETF for oil was on the leverage side. FIS. Yes, I think we have talked about that stock. Fidelity. Also selling off, down 4.7%. So definitely selling off quite a bit here on this news. But again, a lot of these banks will be pulling back, but I think now the fear is a little bit overblown. I've got a video coming out later today talking about this very thing. And considering the government stepped in, now I do believe the fear, especially when it comes to the banks and the deposits, could be a little bit overblown because the Fed is backstopping everything now. So that's where the opportunity might be. Again, I'll be talking about that in my other video. We'll be talking about it. Yes, NRGU. You got a husky voice. Yeah, I've been having, again, some cough for a long time, by the way. Yeah, so NRGU right now down. Big oil index 3x leverage ETFs. This is more on the oil stocks, right? So energy overall is down. That's why this one's down 8%. But in the last hour, we've seen 1.84% gain there. Still down 8%. But yeah, I mean, there's definitely going to be an opportunity for crude oil, considering how much it's kind of traded back and forth here in these levels, in these ranges. Low 70s, every time it gets down to there, it gets bought up. But look at Tech go. Tech's kind of really pulling the markets higher here now. NASDAQ flat on the day. S&P also flat almost on the day. So lots of momentum coming back in. Heat map's going to be pretty flat here, I feel like. Well, mostly a lot of red though. But the markets on an aggregate basis, we are still very much flat. But energy struggling, financial struggling, a little bit of cyclical. So a lot of the momentum's going after more value. So consumer defensive and staples. And then Apple, of course, we got a little bit of healthcare. And these are the exchange traded funds. So fixed income, look at that, right? Very, very green because of that risk-free returns or expectations of those returns. And TMF's up 9%, gold, and of course inverse ETFs because the market's coming down, or at least they were coming down. Yeah, heat map is delayed. Yep, it's delayed by 15 to 20 minutes. Anyway, so thank you so much all for joining in. I really, really appreciate each and every one of you. Make sure that you drop a like and don't forget to subscribe. If you're joining us for the first time, make sure to subscribe because we do talk a lot about fundamental analysis, technical analysis, macroeconomics, stocks and options. So we've got you covered in all those areas. And of course, the link to our Discord and Patreon is going to be down below if you're interested in joining us. Get access to all the trade alerts, options alerts, and what are we looking at on a day-to-day basis. So hope you all have a great day. And again, I'll keep you guys updated with what's going on. Volatility is still higher. Markets are rotating back up, but definitely keep a close eye on the yields, volatility, crude oil. There's definitely going to be an opportunity there. And of course, the markets as well. And more importantly, the banking sector. So happy investing. I'll see you all in the next